Hello and welcome. This is Brandon Wendell, Charter Market Technician, and today I'm going to do some analysis on both the US dollar index as well as some energy commodities that we're looking at in the futures markets for this week of November 21st. So happy Thanksgiving, everybody, coming up in America. And we'll get right into this. Taking a look at the daily index, US dollar index on the daily time frame for the index. We had to go a little bit back here to July 2020 to see our area of supply. We're digging pretty deep into that supply zone. Now we got a couple things going on here. We don't have as much momentum as we did in our previous peak, so that's a little divergence. Expect a bit of a pullback. However, this is happening above 60 on the RSI, which tells me that supply is a lie. So I do believe that the dollar is going to get stronger, driving prices up. I'm sorry, the price of the index up to that 98.71. And that should actually put some weight on the commodities, which is actually kind of good. If you've been trying to fill up your gas or buy anything lately, you kind of feel the pressure of the dollar, the inflation that's been hitting us. So this could help us a little bit here with some strengthening of the dollar purchasing power. Looking at the future side now, it's going from the daily chart here to the dollar futures. You can see the same thing. We're stalling out right now. And really, we can't ignore that we did make a prior peak. So we actually do have a little momentum than that prior peak, but just not as much as we had on the last impulse up. But anyway, we've moved up, kind of caught the 100% continuation of the previous impulse. Might get a little pullback, but if we do, it's not going to go much lower than 95.21. So I see that as a really good retracement point and buying opportunity if you're looking to buy the dollar futures to really push all the way back up to 97.53 or that 98 level we just saw on the index. So moving into, oh, sorry, I forgot. Still on the 4 hour time frame, you see we did already do a pullback here. Again, we've got a high very similar to what we did before, but lots of weakness. So negative divergence happening here. That's telling me that we might pull back first before we rally. So on the previous picture, we were looking at about 95.21. Yeah, it's pretty much the same area, 95.12 to 95.21. You can see on the 4 hour chart. So look for a little bit of a pullback and then the rally. So looking at crude oil, remember I was looking at the weekly continuous contract a couple of weeks ago, or last week actually, and I said there was a lot of weakness coming in. We had already punctured the 23.6% retracement, so now this week we punctured a 38.2%. However, when you have a large candle like this in the same direction you've already been traveling, you should expect some sort of retracement, some sort of a pullback. A lot of times, if you're at demand, it'll be the end of the move. I don't think this is the end of the move, though, yet. I think we still have movement down to the 50% retracement, 73.69. So we still have another, I guess it's a little over $2 to go to the downside. But we might be getting a rally first on Sunday going into Monday. And that rally would coincide with the US dollar falling down a little bit, right? Remember, I said the dollar has to pull back before it can go higher. That kind of falls right in line with what we're seeing here. So if we do get a little bit of a bounce, I'm going to look for shorting opportunities. There's nothing great as far as supply on this time frame. This is the daily continuous as well. And it could possibly bounce off the previous Fibonacci levels before we move lower. There is a demand zone here at 71.48. The RSI is pretty bearish. So that's the daily continuous. Again, moving into the 4 hour contract specific, let me just make sure of something here. Oh, this was the weekly, yeah. So we went weekly, daily. Now we're on the 4 hour. And on the 4 hour, we've already struck that area of supply and started moving down. But as I was saying, we might get a little bounce. And here's why. You got a positive divergence. Prices are making fresh lows, technically not confirmed yet, but it's diverging. And we have a higher low on the indicator. That usually indicates that we're going to get a bit of a bounce. And we're right at this area of demand we've been testing. You got drop, base, and rally. I forgot to mark that one off. So we're in a demand zone. We are diverging. Expect a bit of a pullback to the upside. Probably won't go all the way back up to 78.53, which means we'll go to the 60-minute chart to find out where it's likely to bounce to. Ultimately, though, we should push down into that 70 area. See, there's no other demand there. On the daily chart, we had 71.48 we've got to watch for first before we get down to 70. So keep an eye out there. But again, we could bounce up somewhere in the 78 range, maybe a little less, and then continue down. So let's see where that less might be. When we put in Fibonacci levels, I'd be keeping an eye out. Now we've already bounced. We punctured the 23.6 and closed above it. So I think we're going to go higher to at least 38.2. maybe turn around there, or at the 50% retracement at 77. That should take us down. And we do have a little bit of demand here on the 60-minute time frame, just below $74. So not a bad trade though if we can catch $2 on that move to the downside. Down the 15-minute chart, really not much to help here. Unfortunately, everything's been tested, and we're just kind of still sticking with those two Fibonacci retracement levels, 76.64, 77.12. That turns into shorting opportunity to target that 74 whole number. The natural gas has been much weaker than crude oil has been. See, we had a little bit of divergence where prices were trying to make new lows. Indicators said, nah, we're going up, and we've gone sideways now in price. We have not broken the downtrend yet, though. So we're getting very close to that trend line, which could be the catalyst for another move to the downside to target about 4.65 to 4.429. So once again, kind of the same thing we saw with the dollar. If it gets weak first, this rallies up, then the dollar finds its footing, and we bounce off that trend line and move down. Looking at a smaller time frame here, the 4-hour, you can still see the trend line there. We're pretty close to it. The problem that we're having is you can see we can't get above 60 on the RSI. And when that happens, you do typically start moving down. You don't make new highs. Instead, you make new lows. You notice, let's, for instance, right here, you can see there's a high back on, I guess it was after 2 o'clock on the 8th or something. I'm not sure exactly what day it was. But you can see that we made a high, but didn't make a high on the RSI above 60. And when prices came down, it actually made a fresh low. Here we moved up again, but now the RSI is above 60. So guess what? You make another move and you can't make a fresh low. So that happens quite often. You know, even back here, you see there's a high, RSI is above 60. First move down, does a little bounce, can't get below the previous low. Now we put in a high right here, that little spike. We are below 60, so guess what? We go and make a fresh low. So keep that in mind when you're looking at these markets. Right now, we can't seem to get above 60. You know, if we rally up and hit that trend line and we're not above 60, then I would expect a good shorting opportunity with the target being 4.595. I put the stop loss 1 ATR above. So just look at the average true range on a 4-hour time frame and place your stop above that trend line by that ATR. On the 60-minute time frame, we've already done a bit of a retracement off the lows of 61.8, but we could go further. You know, it does look like we've got enough momentum to do that. We're seeing bullish momentum picking up on the lower time frame. That kind of supports what I was just looking at, that pullback a little bit higher on the 4-hour chart and the opportunity to short the trend line. 15-minute chart's really not much of a help here. I don't even know why I included it, but there is a little demand here at 5025, 4973. That could be a speed bump or maybe a little bounce. But other than that, I'm going to focus really on that 4-hour trend line and look for that opportunity on nat gas. On to gasoline, and I don't know why I'm still paying as much as I'm paying at the pump, and this keeps coming down. It's crazy. So, you know, price has been coming down for several weeks. I just paid $4, over $4 in South Florida, which is extremely high. Anyway, looks like it's still going to keep going a bit. We've got demand and Fibonacci retracement down at 2.1, but nothing till then. And we are just all out of momentum. It's actually, I should say, we're building bearish momentum right now. So it looks like it wants to keep going down. We could get a bounce off that 212. Probably should. You can see we just hit an area of demand right now. If anything bounces here, it's not going to be much. I doubt we'll get above 220 if we bounce here, because we have so much bearish momentum that we're likely to be able to break through this weak demand zone. Now, I don't think we're coming all the way back up. Like I said, we're likely just to pull back to maybe 220, which is a previous breakout point right here, and a support level or demand that became supply. So that may be an opportunity for what we call flip, where the previous demand becomes supply. I forgot to draw it in, but anyway, keep an eye out on that. And the target would be the 207 area first. Oh, nope, take that back. That's tested. We want to go for the fresh area, 203. So we'll call 204 as our target. On the 60-minute chart, we can use the Fibonacci retracements to help us out for figuring out where to enter. We were looking at, I said about 220 for the pullback on the 4-hour. You can see we got 220.21 as a 50% retracement. So either there or the 38% retracement, 218.77 is where I'd expect prices to continue to start to move back down after a little pullback. 15-minute chart, not really anything there to help us except that 221. got an area of drop base, drop supply that kind of correlates with that 220 area that we've been talking about for the pullback, which we've already been to, but there's likely to be a pickup of the selling there as well. So that's pretty much what I got on gasoline. Finally, moving to heating oil. And on heating oil, we've come into an area of demand, pierced it about 50% of the way. I think we're not done. We're going to get a small bounce just like we did in the other energy markets and should continue to push to the downside, eventually targeting 219.33 here, our next area of demand. So just seeing lots of bearish momentum right now. Looking at the smaller time frame on the 4-hour chart, really not much difference. You can see we went all the way through the 4-hour demand zone to the bottom of it. Didn't pierce it, but we will. So if anything, we'll get a little bounce maybe to this 231 before we continue lower. See if we can go into the 60-minute chart. I got the Fibonacci retracements to kind of highlight. And yep, sure enough, 38% is at 231.30. That's where I'm looking at. Possible just a little bounce here before we continue lower. First target 22255, and then 219 is the second target there. So we're seeing that the momentum is dying off to the downside, but it's going to resume once we get up to those levels, I think. So that's pretty much all I got for you guys. Thanks for listening, and I'll be back again next week. If you got any questions, let me know. Until next time, trade safe, trade well, and take care.